Welcome back to the channel, everyone. Today we are talking the one big beautiful bill that was signed into law on July 4th. Whether you've been checked out on the holiday or you've been trying to keep up with headlines, there's certainly a whole lot of noise out there on this thing. There's political messaging, there's the spin going back and forth. And remember, this bill covers a lot, and this really is Trump's entire domestic agenda in one bill. So there is plenty in this bill that's beyond the scope of the Tax Talker channel to cover. But when it does come to taxes, I do have you covered. Let's go beyond the headlines and let's get into what's actually changing for your 2025 tax return and beyond. If you're new here, which does describe 100% of anyone watching this, be sure to like, subscribe, and hey, leave a comment and let me know what you're wondering in this bill or anything else in the tax world. Remember, the Tax Cuts and Jobs Act in 2017 created a lot of provisions on the individual side of the tax code that was set to expire as of 12/31/2025. For instance, the big one would be the tax brackets themselves. Those tax rates that got lowered for a tax year effective 2018, that would have expired at the end of 25. It's no longer going to. You're not going to feel that difference because 2025 is going to be the same as 2026, just with the brackets adjusted for inflation. There are items that are going to be news, and they are going to be effective for tax year 2025. These often are broadly called the campaign promises, promises made, promises kept. They're going to include no tax on tips, no tax on overtime, deductible car interest, and tax breaks for seniors. Certainly more in there, but those are items that we know Trump talked about on the campaign trail, and now they are part of the law, so let's talk about it. No tax on tips. What's that going to look like? This is up to $25,000 in tax-free tips starting in tax year 2025. Really important provision here is it has to be customarily and regularly part of that occupation to have tipping. Congress was aware of the perverse incentives this could create, and they have a direction in there that Treasury is certainly going to flush out, but just know that it's going to be hard to gamify this. It's going to be the jobs that you would expect to have tipping are going to benefit from this. Your bartenders, servers, waitresses, hairstylists, cleaners. The phase out here is going to begin at $150,000 of income for a single person or $300,000 married filing jointly. No tax on overtime. Also beginning in 2025, and it's going to be up to $12,500 single or double, $25,000 married filing joint. It's important to understand what is actually on the table here. It is the premium paid for an overtime worker, but no changes to the overtime rules. This is overtime as defined by current labor law. So if you're an hourly employee making $30 an hour as your base rate and you work overtime, so you're paid the time and a half at $45 an hour, it's the $15. That's the premium paid. That's the component that would be eligible for tax-free status. And there will likely be a box on the W-2 that actually reports this. Moving right along to the car interest deduction. This is, again, just like the other two, an above-the-line deduction. You don't have to itemize in order to take advantage of this, and it's up to $10,000 in car interest will be deductible on your 2025 tax return. The vehicles need to be assembled in the U.S. That distinction is going to cover a whole lot of vehicles. It's going to include Hondas and Toyotas and other brands. You might not think of it as American-made traditionally, but they do meet that assembly requirement. It has to be on loans made after 2024, so it's going to be for 2025 and beyond. It's got to be under 14,000 pounds. It cannot be a lease. It cannot be salvage title, but most first loans are going to qualify. You're going to have to provide the vehicle identification number when you file the return. And I would say it's likely we'll probably see 1098 reporting a mortgage interest form that you'll get showing how much interest you paid. Finally, the tax breaks for seniors, that's in the form of a personal exemption, which is different than the standard deduction. So it'll be on top of that, or a senior citizen who itemizes their deduction would still be eligible for it. It's $6,000 and double that if it's a married couple or both are senior citizens. Senior citizen is someone over 65 years of age as of 12/31/2025. Unlike the previous three items that are going to have income phases out at $150,000 single, $300,000 married filing joint, Senior citizen exemption is half of that, $75,000 single, $150,000 married filing joint. All 4 of these items we discussed are going to expire as of 12/31/2028. So it's going to cover 4 tax years, beginning with 25, ending in 2028. Finally, let's run through a few other key provisions. Of course, the SALT cap, much talked about, goes to $40,000 as of 2025, with phase-outs for both single and married filing joint returns starting at $500,000 of income. QBI deduction was made permanent. We have bonus depreciation. It's back at 100% for 2025, and it's been made permanent. Or better put, it's indefinite until Congress changes it again. We have automatic expensing of research and development, as long as it's domestic research and development. That's all I have for you today, folks. Those are the headlines. Those are the big things that are changing in 2025 and beyond. If you found this helpful, again, like, subscribe, and let me know what questions you have. I'd love to do a video answering your questions.